Hey everyone, welcome back to Corporate Decoder. Are you ready to unravel a story that's juicier than a celebrity tell-all? Because today we're diving deep into Guess's latest annual report, and let me tell you, it's got more twists and turns than a runway show gone wrong. Buckle up, it's going to be a wild ride. First off, this is Guess's annual report, a 10K, so it covers their performance for the fiscal year that ended February 1, 2025. Think of it as their yearly report card to investors and the SEC. It is also specified that this is not a transition report, meaning there is no change in their financial year and no big changes. The filing confirms Guess is incorporated in Delaware and lists their principal executive offices in Switzerland, which might sound fancy. Alright, so what exactly are we going to look at from this filing? A lot of information is incorporated by reference, and if you have seen enough of these, you know what that means. A big chunk is dedicated to what the lawyers make them say, that this report contains forward-looking statements, meaning they're making predictions about the future, and those predictions might not come true because of risks and uncertainties. It's a standard disclaimer. A good part of these reports is the summary of risk factors, the things that could go wrong. It's basically their oops, here's what could mess us up list. A lot of companies like to include links to their websites. For most SEC filings, this content can't be a part of the report. It's good to know that unless they say otherwise, we, us, and our in this report mean Guess Inc. and its subsidiaries. In their core business, they design, market, distribute, and license clothing and accessories. They also make sure to point out their main buyers, which are people who care about style, namely the Heritage, Millennial, and Generation Z groups. Big news for Guess from this annual report is the acquisition of Rag & Bone in April 2024. It looks like they want to diversify their customer base and reach different price points. They are hoping to reach some new client demographics, and this acquisition should allow them to further diversify their portfolio. Now comes the section we all came for, the one with the hard numbers, financial results. The main regions include Europe, the Americas, both retail and wholesale, Asia, and licensing. For Europe, they operate through retail stores and online. In the Americas, retail and e-commerce is how they sell things to end customers. And the Asian markets operate their business in similar fashion. Their licensing segment focuses on eyewear, watches, handbags, and other products. It is important to note that they source products through numerous suppliers across the world. Most of their items are full package purchases where they design and source products, and the supplier delivers the finished goods. In other words, they design but don't own the factories that make most of their stuff. Their marketing and advertising strategy wants to promote a consistent high-impact image. The brand is trying to have their ads promote their products, and most of the emphasis is brand image. A lot of public corporations care about their brand as it pertains to environmental goals. Their global supply chain social responsibility program reflects their strong commitment to help their suppliers implement best practices in safe and decent work environments. In that effect, they expect their vendors and supply chain to adhere to certain guidelines. Alright, the legal team has weighed in to make sure you know what the risks are, so let's check them out. This is where they tell you everything that could possibly go wrong. Currency fluctuations are a big one since most of their business is outside the United States. When the dollar strengthens, their international earnings take a hit. They're at the mercy of the weather. A bad winter or a cool summer can mess with sales and inventory. The United States could implement new tariffs or alter trade agreements. Errors in their tax assumptions could lead to problems with tax authorities. They're also watching out for those new global minimum tax rules. The ongoing war in Ukraine and related sanctions could disrupt their operations in Russia and surrounding areas. If they don't successfully integrate new acquisitions like Rag & Bone, that could hurt their business. They need to manage joint ventures and strategic partnerships well. Opening new stores and concepts needs to go smoothly. They may not be profitable. If people don't shop in person as much, sales could drop. People might buy less at retail location. They've got to keep up with the times and provide a great online shopping experience. The economy is a wild card. Recessions and uncertainty can cause people to cut back on spending. Raw material costs like cotton are unstable and can hurt their profits. Public health crises like the recent pandemic can have serious financial and operational impacts. They need to stay on top of trends or risk losing customers. Protecting their trademarks and intellectual property is super important. Proxy battles with investors can be expensive and distracting for management. They depend on suppliers to deliver quality products on time. A disruption to the IT systems or websites could really hurt their business. Scroll like common stock. To scroll, Steam use of potential avenues to enhance shareholder value, including a pros transaction could adversely impact their stock price. The details of their debt agreements could make it harder for someone to take over the company, even if it's a good deal. Growing stock scrolled, their co-founders own a significant chunk of the stock, and their interests might not always align with other shareholders. Let's move on to properties. Most of their key facilities are leased, but they do own an administrative office in Italy. They have a distribution center in Kentucky and use distribution facilities in other parts of the world. The business relies primarily on the brand image of their products. A lot of revenue comes from overseas. Time to pull the curtain and find out some financials. The net revenue line tells us what the sales were from this period, and the net earnings line tells us the profits. However, be very cautious about just reading those numbers as an investor, since there are more details to it. This means the cash flow from business operations went down. We can see that an increase in labor costs can hurt their operational results, financial condition, and results of operations. The aggregate market value of the voting and non-voting common stock held by non-affiliates of the registrant was $569,800 at the turn to 2024. They have a goodwill of $33 million. Goodwill is the value of a company's brand name, solid customer base, good customer relations, good employee relations, and proprietary technology. They are considering a number of options to enhance shareholder value. If the company issues more shares of common stock, or if any of their existing stockholders sells a substantial amount of their common stock, the trading price of their common stock and the 2028 notes may significantly decrease. The repurchases of shares of their common stock may affect the value of the 2028 notes and their common stock. They have quality control to make sure they solve issues before transportation costs occur. The point-based programs are designed to reward their members by earning points for purchases that can be redeemed on future purchases, either in their stores or online. The company does not work with fur or exotic leathers and is an ethical brand. They have a chief information security officer who makes sure the company does not have any cybersecurity issues. The SEC could take actions that may impact those engaging in short-selling activity involving equity securities, including their common stock. Their co-founders own a significant percentage of their common stock, and their interests may differ from other stockholders. They need to watch their operations to be more efficient. And just a heads up, foreign currency exchange rates can affect their earnings. Okay, what does all this mean? Guess has a lot going for it, but they also face some serious challenges. Their brand still has power, but they've got to make sure it stays relevant and exciting for younger shoppers. That is why they are acquiring other brands to give themselves exposure. Their financial stability is shaky. They need to make sure they can handle their debt and keep generating cash. The global economy is a major threat as it can impact costs. To sum it up, Guess is at a crossroads. If they can successfully navigate these challenges, they have the chance to recapture their former glory. Alright, that's all for this corporate decoder. Don't forget to hit that like button, subscribe, and let us know in the comments if you have any suggestions for reports or corporations we should look into in the future. Thanks for watching.